So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be talking about how you can get started trading options in a Roth IRA the right way. So a Roth IRA is just simply a retirement account in which you've already prepaid your taxes. And so you basically clear the tax hurdle pretty early in the process. And this is why I really like Roth IRAs, is that you pay taxes, you then contribute what's left over after taxes to this IRA account. And as a result, now you have a vehicle that grows tax-free, and the distributions later on are tax-free as well. So when you get started trading options in your IRA, the first thing I think you have to understand is that you have to play the long-term math. And the reality is that you're forced to do this anyway. So the beautiful thing about trading options in an IRA account is that you might have to be trading for 20 years or 30 years or 40 years before you actually come to a point at which you can start taking distributions. And that means you have to play the long-term math and you have to play the long game in these accounts. And that actually works to your advantage. As an options trader, we should be doing this naturally, but oftentimes people who are trading in margin accounts or cash accounts are trying to make a quick buck and end up doing things that are not beneficial to their portfolio long-term. Number two is don't be afraid to trade more often. So one of the beautiful things about trading in an IRA account is obviously the ability to skip or to miss any short-term capital gains tax. And this is something that a lot of people fear when trading in a margin or cash account. They don't want to trade too often, or they don't want to exit positions too early because they fear these short-term capital gains. But in an IRA account, especially in a Roth account, you've already paid taxes. So everything you do grows tax-free. And so you can trade a little bit more often. You can be potentially a little bit more aggressive with your trading because, again, it's in a tax-free growth scenario. So you can scale up the number of contracts that you trade or the frequency in which you trade as well. And number three is IRAs are not a handicap. So I see this all the time, but people always assume wrongly that IRA accounts give them some sort of handicap because they're limited in the types of strategies they can trade. The reality is that you're only limited in one type of strategy to trade, and that's an undefined risk trade. So anything that's undefined risk, which would be a short call, a short put, short straddles, short strangles, you can't trade in an IRA. Those are easily converted into their risk-defined counterparts by just simply creating spreads. So you take a short straddle and you create an iron butterfly. You take a short strangle and you create an iron condor. And so it's not a handicap. It's not something that should limit your ability to trade, and in some cases trade aggressively when implied volatility is high. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.